So at the moment, economic data points have just been in the background because of the importance of Trump's tariffs and whether they're going to be paused and which countries are going to have what level of tariff. It's been very tricky to pick out from all that tariff noise economic data points that are likely to move the markets. That's particularly why they've been quieter on these calendar points over the last few weeks. So just bear that in mind if you're feeling like, oh, the economic data doesn't seem to be, providing as many opportunities as it used to. It's due to the present condition, and that can quickly pass. And we have to bear in mind in this coming week that tariff headlines may overshadow any significance of economic data points, and the market just focuses on the most important thing because it can't focus on everything at the same time. So just bear that in mind as we come to this week ahead. There is obviously UK CPI this week, which is going to be really closely viewed and is going to be the main event for the week. But keep in mind, if you're feeling a bit down on the fact that there haven't been so many economic calendar points to trade, part of the reason for that is the tariff concerns has just been front and centre of the market's mind. Having said that, the first data point to look at next week is the UK labour data on April the 15th. The Bank of England has a difficulty in that it wants to be able to cut interest rates to prop up slowing growth, but it's been unable to because of the firmer inflation, and there still is a firm labour market. One thing that could give the Bank of England an extra incentive to cut rates would be a sharp weakening in the UK labour market. So that's what we'll be looking for, particularly if we see a big surprise to the downside, signs of slowing hiring, signs of a weakness in the UK labour market that will get the Bank of England's attention. That's the sort of thing that can send the pound lower ahead of the CPI print that's coming the following day. So we'll be looking at that. UK labour data could move markets and definitely something on our radar. April the 15th, we got the Canadian CPI data. Now, the last inflation print out of Canada surprised to the upside, coming in, look, at 2.6% for the headline, above the 1.9% expected for the end of last year. So the dollar is particularly weak at the moment, and what we'll be looking for here is maybe something that's a real firm surprise that keeps the Bank of Canada really on the sidelines in terms of cutting interest rates, something that just holds back their hand. So if we see an outsized print to the upside or the downside, that could give us an opportunity with the CAD. Of course, we have to be aware of ongoing trade negotiations between US and Canada, which is overshadowing these inflation questions. Nevertheless, want to look at on the Tuesday, another key data point is probably the best event of the week is the UK CPI data. The Bank of England just wants to be able to cut interest rates, and they can't because headline inflation in the UK is just still too high, and it's well above the Bank of England's 2% target. However, you look at the Trueflation UK index, you can see they've got it coming in at 2.11%, and they've got it falling since the start of March. And what Trueflation do is they measure price changes from a consumer cost of living perspective across 30 different indexes. They look at 30 different data providers, and they're looking at real-time data. So it's seen in its build as being a more unfiltered truth to what the true nature of inflation is. And, they're accessing over 15 million data points is what Trueflation claim. So their indication of what inflation is that it's definitely moving lower, and it's definitely heading towards the UK's 2% target. Now, what will be interesting here is, does that start showing up in the data? And that's what we're looking for. You can see headline 2.8%, well above the Bank of England's target. The core is at 3.5%. So none of this is in keeping with a 2% target, and is in sharp contrast to the Trueflation index, which is at 2.11%. So if this data is correct, at some point it should start showing up here in the official lagging data. And if you just look at Trueflation UK index, maybe January, February, maybe we'll start seeing a drop in this month's data. Very unlikely though, because of the price increases we've seen in the UK with the new tax year. There's been a big bump in people's spending for basic services, mobile phone, council tax, water, electricity, gas. It's all bumped up as we've gone through the 1st of April. So definitely want to watch. A surprise miss is what we're looking for to give us an opportunity to sell the pound, and we'll pick the currency pair nearer the time. So they're the 3 calendar events that matter for this week. Of course, headlines from Donald Trump and any expectations of a pause. If there's sudden announcement that the tariffs are off, they're not going to apply. If there's any big trade deals done between US, China, US, Europe, US, Japan, US, Germany is obviously part of Europe, that could boost and lift sentiment, and the market's hungry for some positive news. Obviously, this is a breaking and a developing situation, so headlines are breaking all the time, and by the time you watch this video, there may have even been some extra significant news, and in which case, those calendar events will have more impact when we look at them next week. I look forward to seeing you next week.